Hello everyone, and welcome to my market analysis for June 25th, 2018. What we have here is the SPY, which is the spiders for the S&P 500 index. So basically, we did have a really bad day today. It broke areas of support that were kind of important today, but found a little bit of support also in these moving averages. So you see here I do have the 89 moving average, and it really went through the moving average but then recovered. So probably this one is going to be an area of resistance. Today it was $3.74 down on the SPY, which is not the worst one we have, but it's in a clear decline since this date here. So if you see here, this date was kind of a topping date. We did see that there's if we draw a price level right here, we see that this is very close to that closing that day, which is also topping up on this one. So we did have 1, 2, and now it came back, and 3 attempts to break, but it didn't. So that's why I signal on this one an area of potential sell-off, because it failed to go above this area here. So I do have also, if you see here, there's an area of breakup that I marked here with an alert. So if the market, well, this one here I look all the time, but if it breaks up off of this level, this would be a bullish signal. Right now, it's actually in a bearish signal. You see that there's some areas of support, which is this 89 moving average, in the daily moving average in this case. And then we do have the next one here, which is the 200 moving average, which is also very interesting because we do have some support areas that are clearly in play now, that so that makes the could make that that the market is going to go to the upside again. But if it doesn't, then this would be another area of support. So if it breaks above this level here, above the moving averages, you see that they are getting together. If it breaks. If it breaks above this, we would be in a bullish mode again. Especially if we break this area here, we can say that it's a bullish pattern. But we are in actually a channel marked for this price level all the way probably to this price level. This diagonal trend line comes actually from. Let me change a little bit the timeline. I'm going to put here 4 years, and then we'll see that this one is formed by these two closing dates. So this one we had it on 2/9, and then this one here, it's another bottom day. So I put put this two together, and that the projection would give me this here, which is very interesting because it is actually converging into the same area of support than the 200 moving average. So if we see again this chart, there's a potential that it can come all the way down to this area. I'm not going to talk about the reasons why, just the what I see in the chart. There's trade wars and stuff that I don't trade news, but but just the graph. So the graph is telling me, in this case, that we're in a bearish mode for the moment, and we need to prove that we are bullish again if we go to above of this level. So next one down. So this one, SPY, is the one that came the strongest in the downtrend actually today. Diamonds, which is the Dow Jones Industrial Average. I'm gonna go back to my 6 months period. Let's put it in 9 months actually. So that way we can see what happened at the beginning of the year. So we went up, we went down, and then we are basically consolidating here, moving horizontal in this channel. Came all the way down off of this this double top again. This is very interesting. It has a double top right here, right there, which is actually a resistance level, and it touched it and then came down. We did have also this diagonal, and this diagonal was formed in between this point here and this point here. Let me double check that one just to make sure. Yes, so this one here, connected to this one here would form this diagonal there. So this could also serve as a horizontal line that the meaning on that one is that is a resistance. Here we found some resistance also. There is additional points of support which are given in this level right here. So we could go down, especially because this diagonal there was violated. So we could see more downside there. This one is also an additional diagonal that comes in the long term. So watch it out. I mean, it's not very clean and very clear that we're going to start moving upwards soon. IWM, which is the Russell 2000, actually had a tremendous move out of this area here. I do have the Fibonacci retracement drawn in here. Basically, it gave a a breakout signal right in this area here. There's some confirmation when it came above this diagonal, and then kept going all the way until this level here. So this one was kind of like a topping area just below the 161.8 Fibonacci extension, and then it retraced. It wouldn't be it wouldn't be unusual if this one goes back down to this breakout area and supported. So this one is kind of like below. I do have some automatic signals. You see, every time that it goes down off of my 8 moving average, I do have a signal that it would alert me. So in that way, I exit the trade based on this signal, or I put I type my stop depending on my strategy. So basically, this one here found support in the 34 moving average right here, but it could go down. If you see this, if I activate this trend line, I do have one point of closing and then another point of closing here. So when it broke, took the trade over here. Then there's another breakout off of that or continuation then it gave us sell signal right there. So basically, in this case we're in a bull flag. If it goes above this area here, I could put we could consider to take the trade again. Now this MACD, if you see every time that it closes the green curve closes below the red curve, we do have like a correction. So we have it here, we have it here, we have it here, we have it here, and then it went up. It didn't last that much, but this one is pretty well extended. I mean, the price improvement has been very, very strong, and then we are in a bull flag. So we'll see how this bull flag develops. We are in a 3-day retracement now, and we will see if this 127.2 level holds, and if not, then it's going to test this a breakout, and this breakout is at 160.30. So the last one is QQQ. This one is the one that was actually hammered today. Also, it is giving us a signal that it broke below the 8-day moving average, so telling us, hey, be careful, tighten your stop and move it down. Actually, this gap, this is a problem when you put a limit order on your stop. If it gaps down as this one here and you are not watching, you can see a further retracement on the value of the stock that you're trading, and you're going to start still wait for the option or the stock to close at this level, below this level, but it will not, because it gapped down. So there's a gap here, and this gap at some point needs to be filled. But it seems that there's some more down on this one. There's some support area here, actually in this area here, that could serve as support, but we'll see. So this one is actually below the moving averages, so it's kind of like moving down there. VIX. So the volatility index in this one actually moved up high today, breaking this trend line. Actually, it was broke this couple of days ago on 621, and then moved up all the way up here. So there's some fear. We will see how it develops, and it seems that it's moving up a little bit. Let's review sectors. Okay, so I had to stop a little bit the video since I had to do some domestic stuff. So anyways, let's continue with the analysis of the sectors. Utilities, XLU, stop right up, found a right resistance level right here at this level. See that close there when it broke, when it made an attempt to break this diagonal. Actually, I created that diagonal when it touched. So if we see here, I'm going to activate. We see that there's a point there for where that candle was closed, which is the 4/27 or April 27, and it comes all the way from this area here, which is this high value on November 30th last year. So XLU came down all the way to this level, found some support here. Then it came back up. found this resistance, which is kind of like very close to this level here, and then came down, make a higher low in this area here in a double bottom, and then came back up. So now it found some resistance. We'll see what's going on, what is going to happen, but it closed above this 200 moving average. All the other moving average are below there. So you know, this is a kind of like a resistance level. Probably not a good time to take a trade. The trade can be taken when it breaks this support, I mean this resistance, and creates a new support. So if it breaks up above that level and then comes back, then this would be an area of support, which is now resistance. So all resistance becomes support. So this one is a W pattern. If you see this, came back down, up, down, and up. XLP, consumer staples, had found resistance in this area and broke this this diagonal. It's coming back up. It's going to find some resistance at this level here, and also at this 200 moving average. So you know, in the sectors, the up down, the price difference here is kind of like you know, $51 to $52. So it's kind of like very, very close. It's not a wide or an extended move. But if we go all the way from this level to up to this level, then could be you know, significant over 5 points. So this would be, could be a good rally now. XLRE for the real estate sector. This one is in an uptrend, going you know, in this channel up in this you know, rising wedge actually, but very mild. So you know, it goes all the way here, already broke the resistance, came back down, tested this horizontal one, and this one was formed actually in between these two. I'm going to activate it so you can see it. It's formed in between this one here and that one there. So it came back up and broke this one, make an attempt, tested, went up, went down, found support at this moving averages, and then broke up again. This one here has plenty of resistance, if you see. So it find resistance at this level, find resistance at this level, find resistance at this level, which is this one here. And now it's going to make an attempt to break up, and will you know, meet resistance probably at this level right here. Okay, so I'm going to delete that one. Actually, it's not remove this drawing. I'm going to let it go. So if it comes back down to this channel here, this is going to be a sell order to find the 31. But XLV, which is a healthcare index, in this sector here, we see that there's you know, it found some resistance at this level, and then came back down, and then touched the 89 moving average. We'll see if it makes an attempt to break up again. This one here, it's kind of like in the high end, and it's crossing below. So it could go back to the 82.50 level, meet this moving average, and then move forward. It broke support in this one. It broke resistance on this diagonal here and moved back up. So one thing that we could do is to make a trend line and see how this one would work. So this one is today's. I'm not gonna. I never make a drawing from today's candle, but this candle here looks pretty reasonable. I'm gonna see if this close here, no, that one, this one here, and then meets actually that one there. Boop. Okay, so this one, it is broken today. Probably, you know, the probability is that it's going to keep going down. It found some support at this level and also at this closing level right here. So I'm going to put a horizontal one. You know, tough to know on this one what is going to happen, but it's always about probabilities, right? But you know, this level actually is very important. You see, it tried to break it, tried to break it, tried to break it, tried to break it. You know, broke it, but not that for that much. Came back down, broke it, and then came back down. Went through. You know, moving along this area here, and then so, you know, this value here, 83.58 seems to be, or around that area seems to be, 83.50 seems to be a very important level. Found support here and then moved up backed up. We will see what is going to happen with this one, but this one is in a channel with a little bit. I don't want to call this one a bull flag, because actually it has some resistance in this area here. Financials came back down, broke this resistance or support level. It's actually in troubles. So we found some support at this level here. But you know, we'll see. It is in a channel with a. I would say this one is actually in a you know, midterm descending triangle. Next time I'm gonna put some drawings tools here, but I used to have it, but I cannot find it. I need probably to install it again in my computer. But if you see this one here, goes up, down, up, down, up, down, up, down. This one could break, you know, badly to the downside, moving away from the 200. Already broke this this trend line here. We'll see. It needs to prove that it's going back in the channel and move to the 28 level. So financials is in kind of like problems. You know, nothing is for sure in this thing, but it seems that on the financials there's no positive news, I would say. XLI, which is the industrials, also coming back down off of this level right here. See, in this level, broke this. There was plenty of support in this area. I'm gonna put it right here where it broke. Tried to break it, came down. Tried to break it, came down. So a lot of trades were probably foolish or fooled in this area here. Sometimes you have to forget or forgive my English. It's not very accurate. But anyways, you know, comes back down, moved from 76 all the way through 71.69. So coming down here. There is some nice support in this area. So let's draw the trend line and see how this one is going to hold from this low right here. See, it found this support. This one is yeah, I'm gonna leave it there. Probably this one is not longer valid. I'm gonna delete it to clean the drawing. But basically, you know, found support in this area here. This one is probably a long term. It was broken and came down. We'll see if this one holds, and if not, it's going to keep moving down. Critical areas here. Basic materials, XLB, also moving in this upper wedge, or in this wedge actually, and then it broke off of this resistance, broke here and found some support in this area. So also, not proving, I would say that it's not the time to buy. Probably, never know. If it keeps falling down, this sell is respected, and then if it goes up, then we need to see that it's proven that it's going to go above the moving averages. XLE, the energy sector, also moving down from this, from this level here. I believe that this one comes from behind. So let's see. I'm gonna activate the drawing. Yes. So I'm gonna go and change this so you can see in a longer term what's happening here. So I'm gonna put 3 years, and actually is yes, off of this level right here. Let's go back down, and then you see that there's a resistance level here that connects to that one, and then found, sure enough, some resistance here. So this trade here, a lot of people could also have taken this one, and then it retraced back. This one is in an ascending triangle, go up, and down. This is an intermediate term. This from April 2nd all the way through May 21st, it was in a very nice uptrend, but now it's moving back down, probably to meet that level here. We will see what's going on this one. Let's go back to my 9-month chart, and let's review XLK, which is the technology sector. This one here had an ascending wedge moving off of this one here, right? So we'll see that this trend here is coming down. It was breaking a resistance all the way back up, and then came down and touched and testing this area again. Found some support in the 89 moving average, the exponential, but it's clearly in a downtrend off of this wedge right here, which is actually, I mean, it's predictable maybe, but when it broke this area here off of this ascending wedge, then you could tell that this sector was in troubles, and sure enough, today was 2.08% down. It was more during the session, but then it recovered a little bit. We'll see what it's going to do tomorrow. XLY, which is the consumer discretionary, this one here, went all the way up. Nice run right here, and then today proven to be, a fail or a test of this resistance or the breakup off of this level right here. So let's make this drawing here at this level, right? Boom, it broke, and then is testing this area here. It's actually in the 34 exponential moving average right here, and in this ascending trend line right here. So it has plenty of support. We'll see what's going on. This one here, it's breaking, like in this case here, it was breaking and crossing on the MACD, which is actually not good, because it's actually in this high level, and then we could see that there's going to be more downtrend in the XLY. So that would be the sectors. Let's review a couple of I'm gonna see some Dow Jones stocks. So let's review. The best performer for today was Walmart. Actually, Walmart was kind of like a break up off of this area here when it break up above the you know, 34 exponential moving average moved up very nicely today at 1.95% to close at 86.47. So we'll see what is going to happen. It has some good resistance here. Can come back down. It depends on how what the market is going to do also. But you know, Walmart is moving out away of or it's moving in this channel. It needs to prove that it can go above this this level here, which is actually $4 away off of this. So if it breaks off of this trend line and also above this moving average and above the this resistance here on the heights of this channel, this could be a good trade, and we would put an you know, an order with a stop below that this level here. There's plenty of resistance now, so not clean to take a trade. AXP, which is American Express, is moving off of this wedge here. It has a buy mood actually. So we you know, this probably this day here was you know, the right time to take a trade. It moved back down, tried to test this this support level, but it moved back up. We'll see what it's going to do tomorrow. There's going to be some resistance at this level, 203.20 something. So and then Coca-Cola also a good performer today, and you know, moving away off of this break on the diagonal breakup, and then move all the way up. So this is what I'm saying, it's trying to break this resistance level, but then came back down. So this one is in a channel, not plenty of resistance points here, but and there's no that much different price difference, or you know, in between where it is now and where the resistance is. So we need to wait a little bit to see what's going on. And then the Procter & Gamble, also in a positive side, found some resistance right up here, and then from 77 can move to the next resistance level or line, which is the 200 exponential moving average. Fill the gap right here, right? So there was a gap in between this value here and this value here that was filled today. We'll see if it's able to break this area of resistance and create some support. So we could see this one was an descending wedge, and it was broken. So we'll see that probably there's some continuation of the uptrend on this thing. So the worst performer for that was Intel. Intel came back down, broke this ascending wedge, tried to break it up and then failed, and then came back down. Here you have the signal that it came back down below the 8-day exponential moving average, and then you know, another one failed here, tried to recover, but I made a lower high, and then you know, followed by a lower a low, and then another lower low, another lower high, and then come back to another lower low. So we'll see when this one it's ending. I see some resistance out of about this level, which is actually very close to the 200 moving average. So I don't see that this one is going to be like bullish for now. Probably it will. You know, you never know. But I see that the moving averages are moving down, and then they are in a descending, you know, bearish posture. Now, Visa also moved down heavy today, 3.24%. Try to break that line here, created off of this one, and oh, actually I made I think that this one here, but I'm gonna activate this. Is actually right there. Yes, but anyways, it's very similar. So it broke this one, came down. Most likely it's going to find, you know, some area of support in the 61.8 retracement or the 50. Nothing is guaranteed, but you never know. There's some resistance at this level, and 78.6. Now it's actually a clear bull flag, right? So it can go back up and then come down. I mean, this one, it's kind of like an area of congestion. I was you know, thinking that this could be a bullish a pattern, right? So it go back up and then consolidates, but now it did the retracement. So we'll see if this one is going to develop into a bullish trade again. For that, it needs to prove that can go up of these levels. And then the last one I'm gonna see, it's McDonald's, which is also down today, 2.88%. You know, broke this resistance level. I did have a trade here, which was actually every time that I do a bullish spread with calls, then I make this this drawing. So I'm going to show you that just briefly. I'm going to edit this this one here, and this one was on 160, 165 on the expiration of 6:15. It went you know, through above, which is very nice. I was kind of like you know, thinking that I could close that position right away, but I didn't, and then it moved back up, and then you know, make the full profit on this one, and then came back down right after. So this one was kind of like a good trade. I haven't, you know, I haven't been successful since that much. I haven't had that much success since this down thing. I was a little bit too bullish on my position. So yeah, it is what it is, I guess. And that is I'm gonna leave it there with the trades that I have. The one that I would, you know, rescue off of today's movement is Costco. So Costco is actually moving up off of this, you know, Fibonacci retracement. So we have already passed the 1.27.2 extension and moving to the 161. So hopefully tomorrow it's going to touch that one, and then I would need to make a decision on what to do with this one. If I'm gonna, you know, roll it up, or take some profit, or scale it down, and take some additional positions on this one. Well, not take additional positions, but move. Take some profits off of that position. It's kind of like risky to do anything with bullish trades now, I think, until the market proves that it's doing good. So I'm gonna put again the SPY. So if the SPY goes back in the up mode, which is that would be, you know, great. For now, I, you know, being in a neutral stand, that would be probably good. So some you know, neutral trades would be appropriate in this point, and I wouldn't go that bullish just now until it proves that it can go all the way up. Okay, so that would be my review and market analysis for today. Hope you enjoy it, and if you have any questions or comments, please don't hesitate to make the comments down in the comment section of this channel. Thank you very much for your participation in advance, and see you next time.